Hello, guys. Welcome to my show. My name is Joseph Ejike Oji. My goal will still remain the same thing, which is to make you rich by showing you the right stock to buy, the right stock to put your money. In today's show, we'll be focused on the stock of Amazon. We all know about Amazon. As a matter of fact, many stuff we buy today, we buy them from Amazon. I like the Amazon Prime, where you buy something and you know exactly when it will arrive. Sometimes it will arrive the same day. Anyway, today you can buy virtually anything from Amazon. Now, like I said, our focus will be on that stock of Amazon. So let me give you some background on Amazon, just a few background. Is an American multinational technology company. The company was started by Jeff Bezos in the 90s. And the Amazon basically focused on e-commerce, cloud computing, online advertising, digital streaming, and artificial intelligence. Like I said a few minutes ago, you can buy virtually anything from Amazon. Excuse me. So Amazon sells many product lines, anything. Now you can even buy pharmaceuticals from Amazon. So things like the media, like books. As a matter of fact, Amazon started as a company that sells books online. Then it now diversified. Books, movies, music, software, apparel, baby products, consumer electronics, beauty products, gourmet foods, groceries. You can buy all these and many others from Amazon. Excuse me. So my analysis of Amazon stock will be based, as usual, on three things. One is the information I got from the balance sheet. Then the information I got from the income statements and the cash flow statements. And of course, the general stock information. So I'm going to start with the general stock information. But to do that, I need to pull up Amazon information. So this will take us to the place where we can get that information free of charge, which is Yahoo Finance. So I'm going to type finance.yahoo.com. And I'm going to, from there, let me make sure I'm saying this. When I'm at Yahoo Finance, I can just type the symbol for Amazon, which is AMZN. And if you can see that it pops up here. Okay, click on it. As of today, Amazon is trading at $153.16 per share. And the stock is a little bit down today. Well, stock goes up and down each day. So if you're a long-term investor, which are the people that this video is focused on, I'm not interested in buying today and selling tomorrow, or buying today and selling next week, or buying today and selling next month. No, this is for disciplined long-term investment where you can buy, do your analysis, make a decision to buy the stock and hold it for at least 2 years. Then when the value appreciates, you sell. Some people hold it for more than 2 years, 5 years, even 10 years. So longer it is a good stock, it will keep going up in value, and that will keep making you richer and richer. So like I said, day traders can make money too, but you make money today, you lose money tomorrow. Make money this week, lose money to the next week, because the stock keep going this way. But for long-term investor, even if it's doing whatever the market is doing, even if it's going up and down, but it will still be trending up in the long run. Anyway, I think you get the point. Now let me show you the Amazon. Let's look at this chart for Amazon. I'm going to pull it up. Okay. So now, as you can see from this chart, I'm going to remove this. Okay, it's already have a, let me put 200-day moving average, because this is what what you, as a long-term investor, you can do. And let me look at the stock performance for 2 years. Well, 2 years doesn't is a short time, so it, is a mixed signal. Sometimes it's trading below the 200-day moving average, sometime above. Well, let's look at a 5 years trend. In this case, you can see that most of the time the stock is trading above its moving average. I mean, talking about 200 days moving average. And if I make it even maximum, and I'm looking at only between 2010 to the current to 2016 and beyond, you can see that during those time, from 2015 to the current day, it is trading above its 200-day moving average, which for a long-term investor means that it is a good stock to buy, because the value is going up over the years. Now, that doesn't tell us everything. So we're going to go back and look at some of the items, other things that will tell us a lot about Amazon. So we'll look at the statistics, okay, for Amazon. So I'm going to use some of the information that we got from the financial statement. Some of them, like I say, not all of them, the ones that are relevant with respect to us making decision about buying or not buying Amazon stock. So we're looking at those ones. So let's start with the financial highlight. Let's look at the profitability. Well, as you can see, Amazon has a profit margin of 3.62% and an operating margin of 7.82%. So let me put it this way. Amazon's profit margin, though seemingly modest at 3.62%, it is quite significant given the company's massive scale. A 3.62% profit margin translates into substantial absolute profit due to the Amazon's vast revenue base. In other words, I mean, it's not that bad. Now, at the operating margin of 7.82%, this indicates efficient management, efficient operational management. Let me put it that way. That's the best way to put it. Excuse me. At this point, we can look at the management effectiveness. You can look at the under management effectiveness. You see that the return on asset is 3.61%, and the return on equity is 12.53%. So that means that these two numbers reflect Amazon's competence in utilizing its assets and equity to generate profits. And these two values are return on asset of 3.61% and return on equity of 12.53%, suggests robust management effectiveness, which is very important, an important indicator for long-term investments. Good. At this point, we need to look at a few items from the income statement. First of all, we'll be looking at the revenue and then revenue per share and other things that we need, other things we need for this company. So now look at the revenue at 554.03 billion. I mean, it's 554 billion 3 cents. No, 554.03 billion. That's what you have here. That's the is revenue. So this is a staggering, because and also you look at this quarterly revenue growth, you see 12.6%. So this staggering revenue of 554.03 billion and revenue growth of 12.60%, it means that the company, Amazon, demonstrates strong and consistent growth. So it also means that it has a long-term viability. So far, everything looks good for long-term investors. Now, if you look at the earnings and profitability, you can see that the Amazon have a net income. Net income is a fancy name for net profit of 20.8 billion, of 0.8 billion. And the quarterly earnings growth of 244%. See, this illustrates a robust financial position. Now, if you look at the earning per share, okay, it is 1.92. Even though it looks low, you have to, it must be contextualized within Amazon's large share count. Then balance sheet information, you can look at the balance sheet. Let's see that the total cash of 64.17 billion. That's the total cash she has. Okay. But we have the let us well, it's still good, but let us look at, I like to focus here on the items that have direct bearing to Amazon's liquidity position. So I'm looking at the current ratio, say 0.99. I mean, I left the cash, I will leave the cash for the cash flow section, So 0.99 means that for each dollar of debt that Amazon have, that's it, 0.99 of, I'm talking about the current ratio at 0.99. It means that for each dollar of debt that Amazon have, it has only 99 cents to settle it. So if you have 1 million debt, it has $999,000 to settle it. So usually current ratio is better when it is bigger than one or more, But anyway, like I said, Amazon, a company that is big as Amazon, that is always growing. I mean, it won't be that surprised to find that kind of value for current ratio. It's only when the company is stagnant, not growing, not expanding, and you have this kind of current ratio that you get worried. Anyway, now we have that in any case, the current ratio that is of 0.99 does not really does not immediately indicate a liquidity concern for Amazon, considering that its business model and cash flow generates cash flow generating capabilities. So I won't worry too much about this. However, the total debt of 166.06 billion, you can see the total debt 166.06 billion, which resulted to an debt to equity ratio of 90. That's debt to equity ratio of 90.76%. That can raise some question about leverage with the company. But like I said, Amazon is always expanding, and if we consider that company's business model and cash flow generating capabilities, I won't worry so much about that. Now let's look at the asset valuation. Some of the assets. We have the book value of 17.71 for Amazon, and this provides insight into the company's underlying asset value, and it looks good so far for that one. Now, then remember I said let us list anything about cash to cash flow statements on the under the cash flow statement, you can see that Amazon have a strong operating cash flow of 71.65 billion. You know, and that indicates the company's capability to generate cash from its core business operations, and is a positive sign for long-term investors. Its levered cash flow of 36.39 billion is crucial for assessing the company's financial flexibility and its ability to pay dividends or reduce debt. Yeah. Now, let's see stock performance. I've already explained that. Now let's see if Amazon pay dividend. Okay. Now it doesn't pay dividend because you can see from here. Dividend and splits. There's no dividends. Okay, it doesn't pay any dividends. But remember this. Most companies don't pay dividends. Majority of them, especially if they are expanding. But that's why sometimes companies that pay dividends, companies that pay dividends are really already matured. They're already matured. They are now they have grown to a certain level, and then what's the best way to put them? We call them blue chip. Most of the time we call them blue chip company. Company like Coca-Cola been there for more than a century. So sorry, more than 100 years, right? So he's already matured and it's everywhere. So they can afford it. They're not expanding the way Amazon is. They have already expanded. They're everywhere. But Amazon, so they can afford to pay dividend. But Amazon is not that Amazon cannot afford to pay dividends. It can, of course, but it is still expanding. So in this case, investors make more money from capital gain, how much the stock value appreciated by a given time frame. For example, I will show you with this Amazon stock. Now let's look at the historical data, and I'm going to check it. I've already shown you this when I showed you the moving average. But I can try to use this starting from maximum they can give us, and I'm gonna use, it is too much for it, right? Let me see if I can use monthly. It won't give us this. Okay, let's see. It froze. Okay, let me go back. Okay. Yeah, it froze. I want to get the maximum, but it froze. In any case, we have covered most of the things that we need to cover about Amazon. I just wanted to show you how you can investors can make money from it, even though they don't pay dividend. Now, okay, it's back. So I'm gonna use the historical data over there, and then use what year? I'm gonna use 5 years, and then okay, then I'm gonna make it monthly. Okay, so you can see that in February of 2019, I'll be using a adjusted close. Make sure you're seeing this. Okay, I'm using the adjusted closing price, so that if they paid, assuming that if they pay dividends during that time, it will already factored in. Anyway, and going down, you can see that the stock price is 81.99. Write it down. Beginning price is 81 points. You can see right here, $99 per share. And by this today, this is for 2019. So 2019, if you count to the present day, 20, 21, 22, 23, 5 years later, 5 years later, now the stock price is now 153.16. So 153.16. So that suppose that you bought it in 2019, when it is trading at $81.99, how much will it be again now? I'm going to show you with the calculator and see. So you bought it at 81.99. So again, the profit now becomes, let me show you again. The price you bought it is this. Bought it 1 minute. Okay. 1 minute. Okay, then I'm gonna go there. Good. This is, you bought it in 2019 at $81.99, and then it is now valued at $153.16. So that they say that you bought 1,000 stock. So the price, how much the gain will be $153.15 minus $81.99 okay, per share. That means $71.17 per share. So if you have bought up to 1,000 shares of Amazon, that means you have 71,170. And if you bought like 10,000 shares, you have $711,700. And if you want to calculate the percentage growth from this, divide this by 81.99. See, you have then times 100, right? To get the percentage. So that means that it appreciated in value by 86.8%. That's a gain. So that's why investors don't bother if the company doesn't pay dividends. So long as the share is still rising, they will not bother. Anyway, I can now, having shown you this, let me now conclude about Amazon. What can we say in general about Amazon? Based on what we have seen so far from the statistics that I explained here, all these numbers, you can see that Amazon have shown constant growth and consistent growth in revenue and earnings in general, which is an essential factor for long-term investors or in long-term investment. And the company's expansion into various sectors diversifies its revenue stream, mitigating risk. Not only that, Amazon's dominant position in the e-commerce and its significant presence in cloud computing through the Amazon Web Service provide a competitive edge that is very hard to rival. And this ensures that Amazon is relevant in the future market of landscape. Now, the financial health can be a little bit concerned because of the what you have at the current ratio and the, of course, total debt. But Amazon's strong cash flow metrics can somewhat mitigate that risk. So the company's ability to generate cash can aid in managing and paying down those debts or the debts. So in general, Amazon, for long-term investor, Amazon presents is a good company. Its market dominance, continuous growth, and innovation-driven approach, combined with the strong financial health, can make this company, I would say, an attractive option for long-term investors. So what should be our decision when it comes to Amazon stock? What should we decide? Should we buy or sell it or not? I mean, if you have it and it based on what you have projected covered so far, what will be our decision as a long-term investor? For me, the answer will be simple: buy and hold. Buy Amazon stock and then hold it because it's going to appreciate even more in future. So I hope you enjoyed my lecture tonight. Thank you for listening. And I will see you in my next lesson when I'll be evaluating a new company. Remember, Amazon is a good one. You can buy it and code. Continue listen to my lecture, and then believe me, you get rich and you live long. Thank you, and I'll see you in my next lecture. Bye-bye.